Hey you guys, I'm Carson Rouse, back with Business Buzz, where we focus on business, entrepreneurship, and investing. Today, we're going to talk about whether Alibaba stock is a buy. Alibaba is China's largest company, just above Tencent. They are led by renowned CEO Jack Ma, is one of the world's largest e-commerce companies. I gotta be honest, after watching his discussion with Elon Musk, it's hard to believe that this guy built a $500 billion company, but he did nonetheless.
And according to the science, right, humans can never create another animal that is smarter than humans. Especially when you have so many smart people, it's impossible to make another smart people.
I very much disagree with that.
Okay.
Many consider Alibaba to be like the Amazon of China. It's the e-commerce giant of China. And many American investors actually have Baba stock in their portfolio as sort of a foreign diversification. However, other investors in America stay away from foreign stocks like the plague, no matter what it is. But in today's video, we're going to get down to whether this stock is really worth the buy and if it's at a good value. I'll be going through their business model, some of their recent news, their valuation measures, and at the end, I will be telling you guys whether I think this stock is a buy. But before we get into the video, make sure you guys go down and leave us a like for Jack Ma. Do it for this man. He's a nice guy. He might not sound the smartest, but he's a nice guy and he built a great company, so like. First, let's talk about the business model. Alibaba actually owns a plethora of different websites, including Alibaba, AliExpress, and Taobao, however you pronounce that, Taobao, I don't know, some sort of Chinese name. It is through these sites that Alibaba acts as the middleman, where they facilitate all of the sales. They make money through ads placed on these sites. Advertisers pay money that Alibaba gets. They also make money by charging users to get higher ranked in their internal search engine. They have sites that are made for both general consumers and large retailers. Also, most of their sites are used by dropshippers in America. So if you're dropshipping or private labeling, you can go onto Alibaba or AliExpress and order in bulk, and that's how they do it. They've also started expanding their business a bit just beyond e-commerce. They've started to introduce Alipay, which is basically a new form of secure online payment that is breaking through the financial industry. By the way, the e-commerce market is still booming, with China leading the forefront of it, believe it or not. In fact, China accounts for over 50% of all e-commerce sales, nearly $2 trillion annually. The Chinese e-commerce market is also projected to remain strong and grow at least for the next few years, probably way beyond that. Okay, we've talked about their business model. Now let's get into some recent news and stock movement. Believe it or not, Alibaba actually benefited greatly from this past virus with a huge growth in sales. The virus actually gave Alibaba a surge in demand to their site, which led them to surpass many estimates for what their revenue and earnings per share would be. Unfortunately, though, this last week, the US Senate is trying to pass a bill that will delist many Chinese companies from US stock exchanges like Alibaba. However, it still needs a majority House vote, and it needs to be signed by the president before it actually goes into effect, so it may never actually get passed. However, even if it does get passed, I personally believe that there will be way too much disdain and anger from US companies and funds that I don't think it's going to stay very long. Not to mention, there's a lot of technicalities that can still keep Chinese companies within US stock exchanges, and even if they're not, they can still be in foreign exchanges that Americans can easily invest in. But despite their great earnings, this recent news still caused their stock to drop 6% just in the last week. But all I see here is a great deal for investors. The stock currently trades at just under $200 per share, which in my opinion, in a few years at the most, we will never see this stock dip this low ever again in our lives. Now let's get into some valuation measures. Alibaba's revenue has actually been steadily growing for a while now. They just consistently do better and better every quarter. In the last quarter of 2019, they reported around $161 billion in revenue. That's up over 37% year over year, and compared to the previous quarter, that's over $40 billion more in total revenue. Despite their insane growth in revenue, they've actually done a bit less in total net income. They've actually done around $20 billion less in total net income, but a lot of this may be due to the low cost purchases due to the virus. It's not big companies paying bulk purchases as much as it is consumers going on to buy a little bit of goods. They still did around $52 billion though in net income, which is still good. They're also very, very cash heavy at the moment, around $350 billion in cash. That's a lot of money. That can get them to acquire new businesses, expand, hire new employees, and do more research and development. Their PE ratio currently stands at 21, which isn't really good, but considering their room to grow, I think that most investors can bypass that. Their market cap currently sits at around $535 billion, which again is the highest market cap company within China. And I wouldn't be surprised if this is the first Chinese company to surpass a $1 trillion market cap and join American companies such as Apple and Microsoft. But keep in mind, China is not the US. Their government runs a little bit differently, and they have been known to control companies way more and keep them from becoming too powerful. Well, of course, the US has been known to do this a few times in the past. With China, it seems way more commonplace. Okay, now we're done with all that. Let's talk about now, is it a buy? In my personal opinion, Alibaba, it's a buy. If you're someone who's looking to diversify your portfolio into some foreign markets, this stock should definitely be considered in that conversation. As China's economy begins to grow at such a rapid pace, and probably will so for at least the next few years, this company should be a huge beneficiary from this. I also believe that their stock is more than fairly valued at under $200. Again, I think a few years from now, $200 is going to be looked at as absolutely laughable with this stock. Keep in mind, when it comes to foreign markets, your investments tend to be a bit more volatile and risky, so keep your position to a minimum. However, I still believe that a decade from now, you will be more than happy that you invested in Alibaba. But again, invest at your own risk. This is just my personal opinion. I'm not an expert, so do your own research. Thank you guys so much for watching this video about Baba stock. I really hope that you consider buying this one. Thank you guys so much for watching. If you found any value in this video, be sure to subscribe to our channel for more content just like this. If you haven't liked already, do so, and I'll see you guys next time.